The housing market has been a wild ride over the past few years, and as we step into 2025, the big question remains, will things finally stabilize, or are we in for another unpredictable year? Many experts predict that we are in for more ups and downs, so today I'm going to break down what we might expect, how inventory is looking, and my take on the situation. First, let's look at the bigger picture. Many homebuyers and sellers rely on expert predictions to understand where interest rates might be headed. However, one common misconception is that when the Federal Reserve cuts the federal funds rate, mortgage rates automatically drop. In reality, mortgage rates don't directly follow the Fed's decisions. Often, after a Fed rate cut, mortgage rates may even slightly increase before they stabilize. So while you might hear headlines about the Fed cutting rates, this doesn't necessarily mean your mortgage interest rate will drop immediately. Instead, those cuts tend to have a more immediate impact on credit card interest rates, auto loans, and personal lines of credit. Mortgage rates are influenced by a range of factors, including inflation, economic performance, and investor sentiment. Now, let's talk about interest rates and what they mean for the housing market. Here's what some of the biggest names in real estate and finance are predicting. Zillow expects home values to increase by about 2.6% in 2025, mirroring the moderate growth we've seen in recent years. Home sales are expected to hit 4.3 million, up slightly from 4.1 million in 2023 and 4 million in 2024. Freddie Mac reports that the 30-year fixed mortgage rate has fluctuated between 6.08% and 7.44% over the past year. They expect mortgage rates to remain volatile in early 2025, but to decline gradually over the course of the year. The National Association of Realtors doesn't anticipate mortgage rates to fall dramatically despite potential Fed rate cuts. They cite the federal budget deficit as a major factor keeping mortgage rates elevated. The reality is, mortgage rates don't always follow the patterns that the experts predict. While there's optimism about a slight easing of rates, it's unlikely we'll see a return to the historically low rates of 2020 to 2021. Instead, buyers should prepare for a housing market with periodic fluctuations and potential opportunities when rates temporarily dip. Beyond interest rates, inventory levels play a critical role in the housing market. Limited inventory has been a significant challenge, keeping home prices high even as demand fluctuates. Nationally, housing supply remains below pre-pandemic levels, making affordability a key concern. In Phoenix, we've seen a gradual increase in available homes. Currently, we have roughly around 22,000 active listings, which is a notable jump from the 4,000 to 5,000 homes available during the peak of the housing frenzy. However, this is still a far cry from the 58,000 homes that were on the market during the 2008 crash. The increase in available homes gives buyers more options and negotiating power, but there's a catch. Many of the homes on the market need updating or maintenance. Sellers who want to stand out need to ensure their homes are well presented and competitively priced. Another key element in the real estate equation is the broader economic environment. A strong labor market, consumer confidence, and wage growth can impact homebuyer behavior. In recent months, job growth has remained steady, and while inflation has been gradually cooling, the effects on housing affordability have been mixed. Additionally, demographic shifts continue to play a role. Millennials and Gen Z are increasingly entering the market, but many are being met with affordability challenges. The ability of first-time buyers to enter the market will be a determining factor in overall demand levels. What does this mean for buyers and sellers in 2025? For buyers, 2025 could offer more opportunities than we've seen in recent years. As inventory levels rise and rates fluctuate, buyers who remain patient and strategic could find good deals. The key is to be ready to act quickly when the right home comes along, as well-maintained properties in desirable locations are still selling fast, sometimes even with multiple offers. For sellers, competition is growing. While we're still in a strong market, homes that are move-in ready, updated, and priced right are the ones selling quickly. Overpriced homes or those needing significant work are sitting longer and seeing price reductions. If your home needs updating, a new roof, a new AC, or significant interior improvements, you cannot expect to get the same price as your neighbor's house that has already made those upgrades we just discussed. Buyers today are savvy and understand that the cost of these updates can range between $20,000 to $40,000 depending on the size of the home and the upgrades that need to be done. If you're planning to sell, you also want to make sure your home is well staged, well marketed, and priced strategically. So here are my tips for buyers and sellers moving forward. For buyers, keep an eye on mortgage rate fluctuations and be ready to lock in a good rate when it's available. Work with an experienced realtor who understands the market trends in your area. Consider homes that may need minor cosmetic updates rather than waiting for the perfect home. Take advantage of seller concessions, which are becoming more common in this market. And for sellers, price your home competitively based on recent comparable sales in your area. Ensure your home is in top condition. Small upgrades like fresh paint and modern fixtures can make a big impact. Be flexible with negotiations, as buyers now have more choices than they did a year ago. Consider offering incentives such as covering closing costs or offering a home warranty to attract buyers. And a lot of people ask, is now the right time to buy or sell? Well, the answer really depends on your personal situation. If you're a buyer who can comfortably afford a home at today's rates and don't want to compete in a bidding war, now might be a good time. With less competition in the market, you have more negotiating power. And if you're a seller, it's essential to recognize that buyers have more choices now than they did in the past 2 years. Making your home stand out is crucial to getting top dollar. Keep an eye on local trends and price reductions, especially as we move deeper into the year. Here are my final thoughts. As we navigate 2025, expect a market that's still adjusting. Interest rates will continue to be a hot topic, inventory will gradually increase, and affordability challenges will remain. The good news is that buyers and sellers who approach the market with a strategic mindset can still find success. If you're thinking about buying or selling and you want to strategize, let's connect and discuss what your goals are. And if you want to learn more about what's happening in the Phoenix housing market, check out my other videos where I break down the latest trends and opportunities. Thanks so much for watching, and I'll see you next time.